Welcome everyone to this webinar for Little Green Pharma, ASX code LGP. Shortly, I'll introduce Paul Long, CEO of Little Green Pharma, who will provide an overview of the company's recently reported December quarter financial results. In addition, Paul will provide an update on LGP's operational activities, including the company's continued expansion into the European markets, its enhanced growth within the Australian market, bolstered by the launch of new brand CherryCo, as well as an update on European and US market sales. Following the presentation, attendees will have the opportunity to ask questions directly to Paul during a live Q&A session. So, as the presentation is occurring, think about what questions you would like asked and submit them in the Q&A box at the bottom of your screen, and I'll put them to Paul during the Q&A session. Okay. Let's get started. I'd now like to introduce Paul Long, CEO of Little Green Pharma, who will run through a formal presentation. And as I said, he will be on hand to answer any questions you may have at the end of the presentation. Paul, over to you.
Great. Thank you, David, and welcome to everyone and thanks for joining our December quarterly webinar.
Paul, I might just stop you for a second just so you can turn on your camera.
Okay. How's that now?
Still nothing at this stage. If you just click the start video button at the bottom of the screen, hopefully that will kick it in.
Yep, I've done that.
We don't seem to have video. Let's just try a little technical fix while we're here. Just be patient, everybody.
Yeah, I've clicked that, David. So hopefully that works. If not, we might just
yeah, no, we'll proceed on the basis that hopefully that'll kick in shortly, but let's get underway.
Excellent. Well, thanks again, David, and thanks to everyone for joining. So we might just jump to the agenda slide if we can there, David, just a few slides down. Yep, we'll just stop there. Thanks. So today we'll be keeping the presentation short and sweet and just give a few further background updates and highlights to the quarterly. But first up, we'll cover the financial highlights for the quarter, including revenue and receipts and our net tangible asset position, along with net cash flows and our R&D rebate. And then we'll move on to the latest addition to our product portfolio, being the CherryCo brand, and I'll give you some more background to that. We've been really pleased with the market response to CherryCo in the back half of last calendar year and into January. And then lastly, we will give an update on the latest developments in some of our key markets in Europe, but also some of the movements we're seeing in the US, and an update on Reset Mind Sciences. Jump to the next slide there. Thanks, David. Okay, so first up, the revenue and cash receipts. So as you can see there, we achieved 5.4 million of unaudited revenue for the quarter and 5.3 million of cash receipts. So this represented an increase of 25% and 33% versus the comparative period, but also a 13% and a 20% decrease respectively on the previous quarter. So the revenue decrease was predominantly due to an oil stock out during October, as we mentioned in the quarterly, and November, to delays from an input supplier, as well as the downsizing of the European customer ordering cycles over the holiday period. Cash receipts were also down due to lower sales and compounded by about $1 million in receivables. Encouragingly, though, we saw a really strong recovery in our oil sales in December, following the restock that the issue that we had back in October and November, and we've already received roughly $1 million of European and Australian white label sale orders for the current quarter. So that's been a really encouraging response. We also delivered our first shipment into Switzerland, and we're very close to delivering our very first shipment into Poland, which has been a long time coming. And both of those will be in this current quarter. We've seen really positive sales in our new CherryCo brand since its launch in December, which I'll take you through a little bit further on one of the later slides. Next slide. Thanks, David. Okay, so the R&D rebate. So just the very next day after we released our December quarterly, we received the $5 million of R&D rebate. We'd previously factored the R&D rebate. So following the repayment of that, the company recovered a net amount of 2.8 million. This was our largest R&D claim to date and reflected a broad range of the R&D investments for financial year 2023, things such as our comprehensive genetic pipeline, which has resulted in the second largest portfolio of flowers now in Australia. And there's roughly another 20 genetics actually in the pipeline at the moment. So we're really seeing the fruits of that hard R&D work in the previous year. Also includes the sponsoring of the Quest initiative. It's important to note that this study is actually patient funded as well. So adds revenue to the company. And it's the largest ongoing quality of life study in the world. And the 3-month analysis results showed some really strong evidence of clinically meaningful improvements, in particular around health-related quality of life outcomes, but clinically meaningful reductions in pain and insomnia. And it also had some significant improvements in anxiety and depression. So those results have been published. And we're in the process of heading towards a 12-month results as well. So we look forward to announcing those. We've also been the largest supplier into the 3rd year of the French pilot, with around 60 to 70% of the total sales inside that pilot as a part of our R&D regime. And the last thing we've done in R&D is we've contributed a various amounts of products into university-led trials, both in Europe and in Australia. Thanks, David. Okay, so as this slide shows, our net, it's important to note on this is that our net tangible asset continues to be significantly above the company's enterprise value. And I'd also highlight our significant tangible asset position compared to its, our long-term debt and share price. The company's asset base includes our Danish facility, which is the largest GMP medicinal cannabis facility in Europe and larger than any other Australian facility that currently exists. We purchased that facility for 20 million Canadian dollars, with the original construction cost being more like 120 million Canadian dollars. The Danish facility is debt-free now, and while Australia's largest medical cannabis facility actually has $60 million worth of debt. So again, we think we're in a very, very good position, particularly as Europe begins to open up with that site. Next slide. Thanks, David. Okay, so our cash receipts were down, consistent with the reduced sales, as I mentioned earlier, and the roughly $1 million of overdue receivables, which were collected in January. Our operating costs were relatively consistent, given costs are fixed, other than a slight decrease actually in the distribution costs resulting from lower sales. And as a company, we continue to focus on improving cash receipts and reducing costs and growing our sales as rapidly as we can, as we really are pushing towards that cash flow break even. And certainly with the response we've had in sort of late last calendar year and into January, we're feeling really positive about that. Thanks, David. So the next one's quite a good segue. As I mentioned before, the focus for us has been with a fixed cost base, really driving sales and revenues being critical. And so a big chunk of last year, our marketing team worked incredibly hard on building out a new brand called CherryCo. And we're really pleased with the launch. And the brand itself is designed to address the growing market segmentation in the Australian medicinal cannabis market, and in particular the demand for lower cost flower products, which our Little Green Pharma products were sitting at more of a premium end. With the introduction of CherryCo, Little Green Pharma now has, we think, the second largest flower range in Australia. And that's in a market where flower sales represent 75% of the sales currently in Australia. So the first product we launched was a product called Little Buddies range, and that really is, as we produce our flowers, we grade out the higher quality flowers into a different brand, and the smaller flowers we grade into the Little Buddies range, and we can sell those into this particular CherryCo brand. And we have up to 6 new high THC indica and sativa flower products. and they're sold in larger bag sizes with a really appealing cost per gram price. And so while the CherryCo signature ranges, we've also looked at a signature range for CherryCo, and that will be a higher quality product, but with a real focus on flower size, terpenes, appearance, and more of a bag appeal, which we're seeing in that drive for the consumer in the flower market. So CherryCo started with the launch of the Little Buddies range a few days before Christmas, and we immediately saw a really positive sales results, which continued through January, and including the launch of the signature range I mentioned before just a few weeks ago. And the results certainly have been really encouraging, and we're actively looking now at other ways to earn additional market share through further product and brand differentiation within the market at the moment. Next slide. Thanks, David. Okay, so as everyone knows, we've invested heavily over the last 3 years into the French opportunity, and we firmly believe now that the pathway is becoming clearer. And the big news was the confirmation of the transition from the pilot phase, which we've been in for 3 years, into a fully fledged medicinal cannabis access regime in the next 12 months now. So it starts with a 9-month transitional period and followed by it's a so-called ad hoc supply authorization period for qualifying products only. So we think that will limit the number of suppliers into that market, which will be a great outcome for us. In that latter phase, so the supply period, that the French government has effectively created a unique form of product registration that sits somewhere between like a full product registration and the Australian regime, and which requires qualifying suppliers to meet very stringent EU GMP manufacturing standards that are normally only applicable to registered products, but we're very well suited and set up to deliver into that. During the transition, that 9-month transition, so we will and the other 2 pilot suppliers will be exclusive to supply in that 9-month period, and it enables us to put together our dossiers for the submission into that ad hoc supply period after the 9 months. And those dossiers are, we've had a lot of experience with those. So we have successfully registered products through a dossier into Poland and Denmark in Europe. So we're very well positioned as a medicinal cannabis company to deliver into France. And we do believe that hard work, the opportunity will be paying off in the years to come. Thanks, David. Okay, so just touch on in Germany. Again, we were one of the first to send product into Germany. Perhaps similar to the Australian market, there's certainly been an influx of products over the last 12 months into the German market, and really the market's been waiting on confidence on what's happening at a regulatory level. And the current traffic light coalition government has now resolved various internal political disagreements with a much anticipated cannabis legislation law, and that looks now very, very likely to come into effect on the 1st of April this year, so not too far away. And importantly, that the proposed laws remove cannabis from the banned substance under the Narcotics Act. So this change in status will significantly improve accessibility for medicinal cannabis by significantly lowering the barriers to accessibility, including around how cannabis is imported, prescribed, reported, and stored. And so, we expect to see a significant increase in volume, which should derive volume, obviously coming from our sites as well. It's also expected that the rescheduling would remove some of the historical negative optics associated with cannabis, which again should have a positive impact, we believe, on volumes into that market. We are incredibly well positioned for growth into that German market. We've got long-standing and very tight distribution networks into Germany with a great rapport and a great product feedback. But we have this amazing, incredible site that I was talking about before, just 2 hours from the border. So we're pretty excited about that change in April and what that will bring for us later this year. Thanks, David. Okay, so I wanted to touch on the US, really, and you would have seen this in our quarterly, but the Human and Health Services have recommended that the DEA down-schedule cannabis from a Schedule 1 to a Schedule 3 drug. So, and the reason why this is important, I'll just touch on this slide, but if this rescheduling is approved, it would open up the US cannabis markets significantly, and facilitate a range of currently prohibited federal activities. So things like banking, cross-border banking, and allowing operators to claim tax deductions for business expenses. Typically, basically what happens is if we trend and track and look at the LGP share price, in fact, all Australian cannabis companies, we can see that we've typically actually followed the cannabis market trend. And so, we fully expect that the rescheduling in the US will build some significant tailwinds for their industry, and by default, drive a re-rating to the market as well. In addition to that, we're also looking at opportunities and implications to look at importing or exporting, in our case, and importing into the US medicinal market when that opens up. Goes without saying that the majority of the multi-state operators and the large US groups have been very recreational focused. So the down scheduling as a drug could give Little Green Pharma a unique opportunity. So we're looking into the possible opportunities and implications of that as we speak. Thanks, David. Just briefly touch on Reset. So we're really well advanced and pleased to announce that the launch of the psilocybin trial at Harry Perkins Institute has launched, and it's been well over 2 years in the making. So it's a very, very exciting opportunity for the company. In addition, we've been fitting out a clinic here in Western Australia in Perth, and that's progressing really well. And in fact, we expect that to have an official launch in the coming quarter. Thanks, David. Finally, I'll just touch on this slide. So just a quick glance at our corporate arrangements, noting that our market cap at around $43 million, I think, and our enterprise value of 38 million. So, and with Thorney Investments and Hancock Prospecting, the company's two largest shareholders, followed by Fleet to Solomon at 7%, and a total board ownership there of 12%. The reason why I identify those few shareholders there is we really have a strong alignment between the executive and the board and the company's success. So we're all driven for shareholder success. I think that was the last slide there, David. So thanks to everyone for listening today. Just a good opportunity to present where we're at, and I'd like to give everyone the opportunity, as David mentioned, to jump in and ask any questions. So whether it's on the quarterly or LGP more generally. So hopefully, David, you got a couple of questions while we're going through the slide deck there.
Thanks, Paul. Yeah, we did get a number of questions come through, so we'll get through as many as we can today. Great presentation, great quarterly. Question for me. How frustrated, I suppose, are you that the company is clearly achieving strong growth, strong success, and is really touching on that profitability point, but is sort of caught in the ruck, if you like, of the ASX listed medicinal cannabis companies that are all sort of grouped together at the moment and not necessarily seeing the benefit of the hard work?
Oh, look, yeah, it's frustrating, David, and I think it's a good question. For us, the focus, it's really siloed our focus into driving sales, managing costs, and really driving the business into cash flow positivity. We do think this market will represent some opportunity. I think at the moment there's maybe 800 plus flower brands in the market, and we know that that's not a sustainable model. So we take the view that there will be a number of companies and products that will drop out of the market in the next 12 months, but we also see opportunity there for consolidation inside this market. So, we're actively have said a number of times now that we're looking at opportunities in this space. And we do believe that whilst frustrating, we see a silver lining to that opportunity. And like I mentioned in the US slide, it's interesting to track and trend other markets and to see how our market has responded across the board. So we feel that globally there's a bit of a tailwind starting, and we feel that we are very well positioned in Australia and in Europe to not only capitalize but to be a part of, to lead that consolidation pathway. And to benefit from the global tailwinds that we think are coming.
Just touching on that a bit further, and a good question's come through. It appears that clearly the company over the last sort of 12 to 18 months has focused heavily on debt reduction and ensuring it had a strong balance sheet. Do you think that'll prove to be a beneficial move over the next 6, 12, 18 months?
Yeah, absolutely. I think, I think for us, there will be opportunity, like I mentioned in the last question, and I think having a very strong balance sheet to look at opportunity will make a significant difference. So, that was a concerted effort for us in 2023, was to absolutely focus on some of that debt. And if we look at that Danish site being debt free and the scale and the capability of what we have there with the German, the French, the UK markets, and some of those emerging markets like Switzerland I mentioned, I think having a debt free position there in more challenging times has been a good move by the company. And we sit here pretty comfortable that not having any big debt hanging over us, that it gives us the ability to really push into that next phase of growth and opportunity across the market as we see that consolidation.
As you touched on, LGP's strategy has always included a big push into European markets. However, the bulk of LGP's revenue, as the quarterly's just demonstrated, still comes from Australian sales. Are you surprised by the slow revenue growth in Europe?
Oh, look, yeah, that's definitely slower than what we were hoping for, but they're emerging markets. So, what we've seen in Australia, we're seeing in some ways some a repeat of those similar markets. So it wasn't just a straight trend of growth in the Australian market, and it won't be moving forward. But in those early years of the emerging markets, it's quite difficult to fully understand. Look at the French one, for example. It should have been a 2-year pilot study and then straight into a full access regime. They've extended it by another year and now gone into a 9-month transition. We're fortunate that in that market, there is fees payable now after that first 2 years. So that's been a positive for us. But it's a good example of having to work through emerging markets. And so, it really is, it's a long-term play. We believe that our product, our brand, will stand the test of time, and we believe that there is a significant market. In fact, we don't believe, we know. We can see here in Australia, we see the volume of patients now, we see the volume of doctors accepting medicinal cannabis, and so we know that will repeat into new markets, and we think that we're just incredibly well positioned in some of those markets. Slower than we'd hoped, but I think the long term, we're very well positioned.
You did touch on the fact that the European growth in revenue has been slower than hoped, but you do have arguably a world-class facility sitting there in that Danish facility. Do you still commit to the fact and still happy with the fact that it's a great buy and will be a key asset as the company expands its European operations?
Yeah, definitely. I think that facility was an excellent buy. We stand by that wholeheartedly. It represents a best-in-class facility, which was heavily over-engineered and obviously not with our capex, and we acquired for a knockdown price, without any debt. So for those who have seen it, it's obviously a deal, too good to pass up. And although European sales have been slower, as you said, we really do believe that the future of the European market and our Danish facility positions us perfectly to capitalise on them.
In terms of the proposed German legislation, how will that affect sales, do you think, in that market?
Yeah, so as I mentioned on one of the slides there, I think that down scheduling will just open up access now. There was a lot of limitations to access, as I mentioned. So I think we're going to see, some really significant changes. So we haven't taken a fixed view on what that looks like, but a lot of the people inside the German market we're talking to are predicting sort of a 2 to 10x increase in volume. So, even in a conservative view of that, that's a significant increase in demand. And again, we 2-hour drive from the border, our Danish operations. So yeah, we certainly see some great opportunity from April when that plays out.
As you mentioned, the Australian cannabis market does seem pretty congested. How do you stand out in this market, and particularly as you look forward over the next 12 to 24 months? What's the unique selling point, or what's the opportunity to stand out in a very congested market?
Yeah, look, what we've been doing in 2023 is really thinking about this industry with market segmentation. As different product lines are introduced to cater for specific market components, so it's very different to where the market started. Which is one of the reasons why we introduced CherryCo, and one of the reasons why we think it's been so successful is it's very segmented and market targeted towards a need in the market, and we expect further differentiation across existing formulations inside our own portfolio, and new formulation, things like edibles, and we've brought vapes out into the market, and we also see an opportunity for the more traditional pharmaceutical at the same time, and we think that the market will begin to segment in that way, and we'll ensure that our team are focused on building brands to suit those markets. And we've got that in-house production capability, so we can pivot and move towards what the market needs and what we're seeing inside the market. And again, CherryCo was a fantastic opportunity to do that, and we've so far seen some great results.
Last question. Clearly delivered a strong quarterly in the most recent quarter completed. What's the focus for this quarter coming up that we're now well and truly in? And what do you hope the end result will be for the quarter? Clearly not wanting to put any projections out there, but what do you think the focus will be for this current quarter?
Yeah, look, I think this quarter and our long-term focus and strategy really has been unchanged for a long period of time, which is, let's really hone in and focus on getting the company to cash flow positivity. So that will remain an absolute focus for us. And, we're confident, as I mentioned before, with what we've seen with the launch of CherryCo, and some of the rebound we had in December. So that's an absolute core focus. While we explore and exploit those opportunities into the European market. So I think we're going to see, we'll begin at the back end of this quarter into the next quarter. There'll be a lot of talk about the German market. We think what's happening globally, the tailwinds in the US will change. And as a company, we continue to explore those opportunities. Australia will work on market segmentation as well. So whether it's next quarter or the one after, you'll begin to see some new things that we've been working on in the background for a long time that we think can replicate the success we're seeing in CherryCo.
Well, that's got us through all the questions, and we're pretty much right on time, Paul. So thanks for a great presentation. Thanks for wrapping up the quarter results beautifully and for answering the questions that came through today.
Thanks, David, and thanks to everyone for joining. Appreciate your time.
That ends today's webinar for Little Green Pharma. Remember, a copy of this presentation has been lodged with the ASX, and if you'd like further information about the company, please go to the company website, www.littlegreenpharma.com. Thank you to you for tuning in and listening to the presentation, and Paul for your presentation today.